Hi, welcome to the Market Alert for Friday, the 17th of December 2021. So Powell pump and dumped as dollar slumps, gold jumps, and just like that, it was gone. It certainly was. It hasn't been helped, of course, by the Bank of England raising rates. Never thought they would ever do this, let alone before Christmas. Certainly going to be interesting in January now, because obviously, having set this precedent, the US will probably likely follow with a small increase, which should send jitters through the market, plus all of the Omicron fears as well. Don't forget, today is expiration. So there's trillions of options expiring today, along with futures contracts and stock index equities as well. News today, what have we got? It's Friday. Retail sales, German info, and FOMC Wallery speaking at 6 p.m. So that won't be of any relevance whatsoever. Neither will the other news, to be honest with you. Apart from, retail sales month on month, they're showing they're going to be flat. We'll wait and see. That's at 7 a.m. when the German DAX opens anyway. So let's have a look at the markets, see where we are from yesterday. Starting off with the Dow, the market trading above the recent high, but failing to hold at 89% retracement as well, which is drawn from this high to this low projected back. Market came back below this, but sitting sideways at the moment, closed below the 5-bar moving average. We'll see prices attempt to move lower. So we've got these two lines here. These are the high and low, swing high and low that's been left behind. So from there to there, you can see the market's currently just below the 38% in this move between the two swing points there. So this is the downside target. On the upside, it's still got to get through this 89 and also yesterday's high, and then you've got the main 89 from here down to here. But we're stuck in a bit of a sideways move at the moment, and it's not just the Dow. The DAX is also stuck in a sideways move. So you can see yesterday the market moving to the upside. Again, if I just draw in from this high down to what would have been the swing low there, you'll see the market stop at 89% and also the R1 before moving to the downside, and all the way back down to the DP, the 200 MA, and then being oversold before the market then found a bit of support. Overnight prices just sideways again, sitting on the 200 MA at the moment for the Dow. Needs to get back above the DP if it is to move higher. So we'll see if it can achieve this. I'm hesitating because I'm just trying to think at what time. It's going to be I think it's 1:30 when they start to roll over the expiring options. It's not at 2:30, although the volatility will increase at 2:30. So we may see the market sort of trading sideways for the morning as they start to roll over and get out of those positions. Let's have a look at the German DAX. This also we're struggling with 89%. Again, we've got this sort of swing high, low in the sideways range. And again, if we draw from there to there, you'll see prices back through the 50, just coming to the 62. Again, all of this area very important, particularly the 200 MA as well, which will tie in with the 78% retracement. Close below this will find support initially, but if it breaks, then you'll head down towards the 72. Not a lot on the upside apart from this 89% retracement, which the market needs to take out. In the 30-minute charts, if I can find it, a lot of charts open here. I know it's in here somewhere. Yesterday you can see the market moving up in the futures and then down in mid-morning and all the way down following the Dow. And of course the rate increase from the Bank of England. The market was doing fine until that came out. It was a nice move in the 5-minute chart, lovely long, and then all of a sudden it reversed. Didn't even make a retracement. It was just straight down There was an inverted V shape there, and down it came. The market also finding support at yesterday's low at the moment. As we look into the detail, you can see it's very sideways overnight at the moment as well. So again, waiting for the options expiration to begin from this low to this high also brings you back to 89% area as well. But we'll need to start moving higher. If not, then if we take out the low in the DAX, then we're heading down to the S1 level. That will be the next downside support there. In the 2-minute chart for yesterday, let's just move back to the earlier part of the morning. We had a nice move to the upside. First thing, as the market opened, with prices trading all the way up until they closed below the 5-bar moving average there, with a 16-point profit or potential profit on the first trade. It's annoying because it reversed and then moved back up to then close back a bit later. It is a good idea sometimes just to switch to a bigger time frame once you've timed the trade in the smaller time frame. Here we've got divergence in the stochastic with the green there showing support. The market then starts to move to the upside, but yet again comes back off the scalp, which in fairness is going to be 89% projected back to there. So the market trading sideways, bit of a clue there I suppose, but then closed back below the 5-bar moving average, giving a small loss on this one for me. I'll just show you why. There it's a 5-point loss. The market then found support and then reversed and moved up, and when you actually look at it, the next close below the 5-bar moving average is actually back at the scalp as well, unless of course you took note of the climatic action there as the market moved higher. You then got the selling coming into the market there, but it soon whipped back. And then the morning, the market just traded sideways back down to the 200 MA with further divergence in the stochastic. This is how it looked. You can see there that we've got prices moving lower, but the divergence coming back, and then that set the tone for the market to move higher. And then we had the release of the Bank of England, and we saw prices then move or grind lower all the way down until we got to the afternoon session. We had a sell to kick off the afternoon, and you can see there, and then eventually closing back above the 5-bar moving average there, which was 21-point profit or potential on that move. And then after we had a move to the upside with the signal generated there back through the 5-bar moving average, as you'll see from there to there, giving another 16 points. So it wasn't too bad. It was just that the second trade in the morning that was a bit of a pain because it pulled back before it moved back to the upside. Overnight, we already know from the 30-minute chart that prices are trading sideways. They gapped higher but didn't hold. As you can see there, started to sell off and are currently sideways at the moment, sitting on the BRN of 15,550 at the moment. Now finally, in the metals, a good day yesterday as well for silver, coming off that 89, particularly that the interest rates have gone up in the UK to try and combat inflation. It won't work, will it? I mean, it was a meagre increase compared to what inflation is actually rising. So again, it's just a pointless exercise. If they put the rates up to 1%, then it would have been useful in attempting to actually put the damper on inflation. But they can't do that, of course, can they? Because it increases the interest payment on the debt and would absolutely destroy the housing market, where people have got used to paying a very, very small amount on low rates, or a large amount on low rates. It wouldn't take a lot to sink the housing market. They can't even dream of putting the interest rates back to 5%. It would absolutely be catastrophic for the housing market, because most people have been paying 1 or 2%, and that means that they would see more than 100% increase in their monthly payment, and that's not going to happen in any time soon. So yeah, silver and gold having a good day yesterday, trading back You can see there we've got a swing point there, back to 89%, and now the market's having a breather. Meanwhile, in the gold market, we're seeing a different story. It's charging to the upside this morning. And again, you'll see we're just through 78%. We've got 89 and this real resistance there, price resistance to get through. This is impacting still on the gold-silver ratio. You can see it's still in the 80 range, still a bargain. And you can see also that it's turning green, moving to the upside, which is, again, you'd expect that because silver's under a bit of pressure this morning, whereas gold is marching up, and that's causing that gold-silver ratio to continue to widen. Meanwhile, in the dollar yesterday, market down, and if we go from here, let me show you why I'm going from these 2 points. Go to physical resistance and just apply this. I'm just going to double this up so you can see it on the screen. So it's left its swing points behind. From here down to here is the upside targets for the dollar if it moves higher, and then from here back up to here, you'll see that we're at 78% at the moment. It needs to break the 89 and also this low here in order for the dollar to move lower, and possibly for the metals to continue to move higher during today. We'll have to wait and see. Of course, we've got the expiration as well. Anything can happen during today. Okay, I think that's it for this one. If there is anything else to report today, anything major that happens, then I'll let you know. But otherwise, we're at Friday, so have a great weekend, and I will see you on Monday. As ever, thanks for watching. See you in the next one.